So, you're new to the United States, and it feels like everyone is talking about this thing called credit, right? It can feel like a totally new language, a little confusing, maybe even intimidating. But here's the thing, understanding it is one of the biggest keys to your financial success here. Today, we're going to break it all down, together. This is your guide to building U.S. credit. Let's jump in.
I want you to think of your credit score as your American financial passport. It's honestly the best way to look at it. It's not just some random number, it's the key that unlocks almost every major life goal. You want to buy a car, you want to buy a house, even get a better deal on your insurance? Yep, they all look at your credit score. A strong score literally opens doors, and well, a weak one can keep them shut.
Now, this is a huge mental shift, especially for those of us coming from places like Ethiopia. Back home, your financial reputation is all about community trust, right? Through systems we all know, like ECUB and EDER. It's about your word, your relationships. But here in the US, it's a completely different game. It's built on a formal data trail, a history of every financial move you make, all collected by 3 big companies, Experian, TransUnion, and Equifax. The challenge isn't about not being trustworthy, it's about learning how to prove it in this new data-driven way.
So, if it's a new game, let's learn the rules. We're going to decode what actually goes into that 3-digit number so you can start building a really strong score with total confidence.
Okay, so a credit score isn't just some random number they pull out of thin air. It's actually a recipe, and it's made up of these 5 key ingredients. But look closely. 2 of these factors are way more important than the others. You've got payment history at 35% and amounts owed at 30%. I mean, together, that's 65% of your entire score right there. This tells us exactly where we need to focus all of our energy.
Let's start with the absolute king, payment history. At 35% of your score, it's the biggest piece of the pie for a reason. It asks one simple question: do you pay your bills on time? Every single time? That's what lenders care about more than anything. Just one payment that's 30 days late can do serious damage to your score, especially when you're just getting started. This is the foundation for everything else.
All right, the second biggest piece is something called credit utilization. It sounds complicated, but it's not. It's just the percentage of your available credit that you're currently using. Think of it this way. Imagine your credit limit as a glass of water. Lenders start to get pretty nervous when that glass is almost full. So if you have a credit card with a $1,000 limit and you've spent $900, your glass is 90% full, and that's a red flag. The goal is to keep that glass less than 30% full at all times.
And this is why the beginning is so critical. When you first start out, you have what's called a thin file. That just means there's not a lot of credit history for lenders to look at. And what that means for you is you have no cushion, no safety net. For somebody with a long-established credit history, one late payment is a problem. But for someone with a thin file, that exact same mistake can be a devastating blow. It can drop your score dramatically. That first year is really a time where you have to be extra careful.
Okay, so we understand the rules of the game now, but how do you actually start building a history when you're starting from zero? Let's walk through the very first practical steps on this journey.
Here is your action plan, your first 3 moves. They're clear, they're strategic. First, you need to get a product that is specifically designed to build your credit. Second, if you have the opportunity, become an authorized user on someone's account who you trust. And third, you have to master that foundational habit. Pay all your bills on time, every single time.
And this is one of the most important things you need to know. You have options, even if you don't have a social security number yet. Many of these products will accept an ITIN, which is an individual taxpayer identification number. A secured card is a fantastic place to start. You basically put down a cash deposit, and that amount becomes your credit limit. Or there's a credit builder loan, which is another great option that actually helps you save money while you're building a positive payment history.
Building that initial credit is step 1. But now, we've got to talk about mastering the habits that will help you maintain and grow that strong score for years and years to come. This is all about playing the long game.
This chart really drives home that 30% rule we were just talking about. Your goal is to live over there, in that green zone on the left. Keeping your balances below 30% of your total credit limit is good. You know what's even better? The people with the highest scores often keep it below 10%. Just remember, high balances signal risk to lenders, so paying them down is one of the absolute fastest ways to give your score a boost.
So, if you take nothing else away from this, please remember these 3 core habits. First, the golden rule. Always pay on time. No excuses, no exceptions. I recommend setting up automatic payments. Second,
keep it low. Keep those credit card balances way below that 30% mark. And third, play the long game. The length of your credit history really matters, so don't close your oldest credit card, even if you don't use it very often. Keep it open. All right, you've worked so hard to build up your credit. The final crucial step is knowing how to protect it. This is how you make sure all your progress leads to long-term financial security.
So, how do you protect this financial passport you've been working so hard to build? See, it's not just about getting a good score. It's also about being proactive and knowing your rights so you can defend it from any mistakes or even from fraud.
You should know that U.S. law gives you some really powerful tools to protect yourself. First, under something called the FCRA, you can get your credit report for free every single week. This is your chance to be your own detective. Check it. And if you see a mistake, you have the legal right to dispute it and get it fixed. And this is so important. The Equal Credit Opportunity Act protects you. It makes it illegal for anyone to deny you credit just because of where you come from. You need to know these rights. They are on your side.
Unfortunately, we have to talk about scams because newcomers are often targeted. So please, be very careful. No legitimate lender is going to guarantee you a loan and then ask you for a big fee up front. That's a scam. Government agencies will never call you and demand you make a payment over the phone. And if anyone pressures you to act immediately or asks you to pay for something with a gift card, it is 100% a scam. Just hang up.
You know, it's really easy to look at credit as something to be afraid of, just another burden to deal with. But the real goal here is to change that perspective. Because once you understand the rules, once you're in control, credit becomes what it's truly meant to be. A powerful tool for self-sufficiency, a tool for achieving your goals, and for building a strong financial future for yourself and your family here and your new home.
Building credit is so much more than just the number. It really is about building a future. If you found this guide helpful for your journey, please subscribe to our channel for more explainers just like this one to help you succeed. Thanks for watching, and we'll see you next time.